Hey everyone, welcome back to Upside Down Data. Today I want to talk a bit about the exploit that happened on the Hedera Hashgraph network, what it might mean for Hedera going forward, and what HBAR's price might do leading out of this. So to get into it, I'm sure you are all aware that Hedera suffered an attack on the 9th. I'm currently recording this on the 11th, and it now seems apparent that it was an issue with smart contracts. And it has now subsequently been resolved. The network is back up now and functional. I want to just talk a little bit about what happened and then what we might make of this. So if you've been following, you're probably aware that this attack happened. And one of the things that ended up happening with the network is that they disabled the IP proxies, which basically meant that no one could actually access the network. The network was technically still running, meaning that technically never shut down that whole time, but no one could get in and use it. Basically, access from the outside was cut off. Now, fortunately, they did find a solution, and yesterday access was restored. And if you want to see an in-depth breakdown of exactly what the attack was and how it worked, Hedera on their website, they actually have this really detailed, this nice detailed breakdown of what the exact issue was, what all was affected. The attack itself was mainly targeted at DEXs. Basically, the story of all, not all, but most crypto kind of hacks that you see is that someone figures out a way of exploiting DEXs. They go and they try to steal money from liquidity pools. And then in this case, they're trying to get the funds out via a bridge, which was shut down. And in the kind of grander scheme of things for hacks, this one was actually relatively on the small side. So it was about $600,000 worth of assets. So certainly not nothing. But in a world where, there have been DeFi hacks that have been 600 million, this is relatively small. And it does seem like the damage was relatively contained. Now, of course, to be able to contain that damage, there was a lot of action that happened, especially the kind of shuttering or blocking off of the network from outside access. And that's drawn some scrutiny, right? People are saying, well, how decentralized can Hedera possibly be if people can kind of add a whim, if they can just basically shut off access to everyone for having it? Now, I think there are different ways that you can look at it. I think a lot of people, what they're saying is that they'd rather this be the way that it's handled, where user funds are protected as much as possible rather than just letting it run amok. But certainly you are going to raise those eyebrows. This reminds me of the hack that happened last fall on the Binance Smart Chain network, where they actually did there also pause the network. Now there they actually paused it, I believe, not just shutting off access to it. But one of the big kind of scrutinies of that move was that, this looks very centralized. So certainly, sure, it was done to protect users, but this does not look like it's a network that, isn't just being held or controlled by a smaller group. Now, the thing about Hedera Hashgraph is kind of by its very nature, the way that it does decentralization is a little bit differently. It is a smaller number of entities that are kind of controlling it. But, the attempt here is to get a bunch of different companies from all around the world so that the power is kind of decentralized, even if it's a relatively small number of entities that hold that power on the governing council. So I'm not going to be here to litigate that or to argue the pros and cons. I think everyone has their own opinions of that. I'm guessing most HBAR bulls are probably more in favor of it than not. But it's something that you're probably going to see. I mean, you've already seen it come up. It's definitely going to be something that's levied against it. And so even if you don't believe that it's a problem, even if you don't think that that's an issue or that this actually is any, basically bears any negativity on the decentralization of Hedera, know that it is going to be a negative PR narrative that Hedera is now going to have to deal with. And so, going forward, as, the node operation becomes less gated, as it becomes permissionless and things like that, that'll probably help. In the short run, that's probably something that's going to be used as an attack against Hedera. Now, one of the other things that's concerning is that while that issue was happening, as I mentioned, there was a shuttering of the network. No one could use it. And if you went on to HederaTransactions.com, or actually HederaTXNs.com, what you would have seen, and what anyone who went on would have seen, is 0 TPS during that time, which of course is not good. And one of the big kind of bullish narratives been going on with Hedera over the last month or so has been how massive the TPS has been on the mainnet. As we've had different use cases go live that have really started to use this, we've had high transactions per second. Now we are back, right? The network's back. Right when it came back on, I checked and it looked like we're only at like 5 TPS, but then that must have been because, some of those use cases hadn't turned back on yet. Seems like they're back on here. But one of the things that is concerning about this, right, is that if these companies that are building on Hedera now have it in their mind, or other companies who might be considering it have it in their mind, that this is not going to be a guaranteed uptime thing. They can't necessarily rely on the network to always be live and accessible. Then that maybe could be a problem. Imagine if there's a company that can't afford to have any downtime, or can't afford to have 24, 48 hours where they can't access the network. That's going to be a problem. Now, certainly this is rare. This is the first time this has ever happened with Hedera, so you'd hope that it's not something that'll happen again. This is kind of a fluke, a one-off thing. But certainly, at least in the short term, I think it's something that's going to be a bit of a cloud over Hedera, where if you're a company looking at this, and especially if you're considering Hedera versus some other chain that's never had an outage, that's certainly not positive for Hedera that it now has. Now, again, people are going to make arguments that, in this case, it was worth it to protect user funds, all that kind of thing. Again, I'm not litigating that. I'm not going to make a judgment there. I'm just saying that of the arguments that are going to come up, I think that's probably potentially going to be one. Now, that's all said, I do think that these are largely short-term narratives that will probably kind of resolve themselves. If Hedera continues to have a lot of uptime, and then especially if a lot of other use cases get deployed here, and then everyone has positive experiences, I think things will kind of pass over. How many times has Solana gone down, but yet it's been resilient and people just continue building on it? I think you might see a very similar thing with Hedera. So really with those narratives I was bringing up, I think there's short-term issues that might be kind of short-term bearish narratives. But unless this becomes a chronic problem, which I don't think is the base case by any means, then they're probably going to blow over. Memory is short in crypto. I don't think people, a year from now are really even going to be talking about this. And especially if we don't have any more instances in that time, I think it's going to be fine. And I highly doubt that this would be a thing that would make current use cases just abandon the project, or for people who are already starting to build use cases to just not finish them. I think it would only be the case if this became a really chronic problem where that might become more of an issue. So not great in the short term, but something that we should probably keep an eye on. So if we just look at the price of HBAR across time here. So really, this is the hourly chart I'm showing you here on TradingView. And what we can see is that really here back on 9th is when we got that big drop in the price of HBAR as all of these issues happened, and then as the network got cut off. Now we have rebounded slightly from the lows, but certainly this has just kind of been part of this broader downtrend we've seen with Hedera. Things have been pretty kind of bleak ever since we had that big run up in late February. So I want to switch more to a conversation about thinking about the price of HBAR and where we might think it could be going. So first I want to switch over to our website, claritydigital.io, that we've launched in collaboration with Jay over at Daily Crypto Analysis. So if you've not been on the site, this is the dashboard page where we have live metrics of all of our different models here in real time. So here are the models for Hedera. I actually want to focus in on the momentum bias indicator for HBAR, because I want to talk more about the long-term trajectory. I'm not really as concerned about the short term, because I think, there's going to be volatility, things are going to bounce around. But ultimately, I think most people investing in crypto, but especially, the sense I get from the HBAR community, they're not here for the short term, they're thinking about it as more of a long-term thing. So I think it's more useful to talk about, from that long-term thesis, then what might we be looking at. So this is the momentum bias indicator. So this is the price of HBAR across time in the white line. And then this line here is the MBI, green when it's above zero, red when it's below zero. This white line is the zero line. Now, one of the things we've been seeing with HBAR is all throughout this whole time here, really coming off of November of 21, we've been just in that oppressive, horrific downtrend, that bear market for HBAR. And that, when you look at the momentum bias indicator, and this is a momentum bias, so basically when it's positive, that means there's a prevailing positive momentum in the market. They really push price up. And then when it's down in the negatives, that's this negative prevailing momentum that really pulls price down. And this kind of signature that you see this entire time is textbook bear market behavior, where you spend a lot of time in the red, try to reestablish positive momentum bias, fail, go down to new low, try again, fail, go down to new low. But now, with this big rally that we saw going into February of this year, we actually did a decent job of trying to reestablish positive momentum. Now we have gone back down into the negatives, but that might not be concerning, because what you tend to see on this indicator is that in transition periods between bear markets and bull markets, so bear markets and then leading into a bull market, you oftentimes will see this kind of oscillation around zero. We kind of saw it here, but you will see this even more clear if you go look at Bitcoin, Ethereum, or any of those that have really seen kind of multiple cycles. you'll see this play out where you have this bear market kind of signature, this oscillation around zero that then plays out, and then that can lead into that big bull market. So what I'm seeing here is that this is a potential sign of a breaking of the bear market. Doesn't mean we're just going to go clearing off to all-time highs anytime soon, or that we can't go back and retest these lows or anything like that. But what it might mean is that this kind of regime is behind us, that this just oppressive down-only kind of situation is largely behind us, and we might be entering it into a more of an accumulation zone where price could kind of chop, maybe have a lot of volatility, sure, but kind of more or less go sideways for a while, kind of like what we did back here, which then could ultimately lead into that bull market when the rest of the crypto market's ready to go. You know, I'm not at the point where I think that Hedera is going to break from the rest of the crypto market and go rallying on its own, but especially if we see more use cases be developed, if we see the transactions on the network remain high, things remain bullish from some of those more fundamental perspectives, it could end up being a decent leader in the next bull market whenever that comes. Now, again, a lot of that's going to be dependent on if it continue to maintain those fundamentals throughout that whole time, so we'll have to keep an eye on, but something that I am looking at. Now, the other thing I wanted to talk about was give a bit of a sneak preview at another model that I've been developing. So this one's not on the website. This is one that we're hoping to add to the website in the future. I'm still kind of working on these models, kind of make sure that they're, you know, as satisfied as I can be with them. But I want to give a sneak preview of what this is. So I've talked about this, you know, in various different videos in the past. I've given hints about and kind of sneak previews of this model. I want to talk about it here as well. So this is a model that gives a probability to how likely we are to see a positive or a negative return in the next 180 days. Basically, if you're projecting out 180 days from now, what's the probability of us seeing upside, basically? So the way you can read this y-axis here is the probability. So 1 would be the model saying 100%, and then 0 is 0% of upside, and then 50 would say 50% of upside in the future. So basically, if you're above 50%, then that's saying the model is saying that it thinks there's a better than 50-50 chance that we'll see positive returns in the next 180 days. Being below 0.5 would be a worse than chance probability we see upside in the upcoming 180 days. And so the white line here is that probability. This is the model's output. And then the yellow line here is the HBAR price. And you can see it's done a remarkable job going through here of calling it. You know, I've in this particular version I'm showing you, the model is trained to data up through around this point, and you see it did a great job identifying this whole time here as a time when upside was not especially likely, but then it flipped bullish right leading into when we got this big pop. And so technically speaking, you know, through this whole time, and especially down through here, you know, expecting upside in the coming 6 months was a reasonable thing to do. And so then, you know, the model has gotten quite bullish. Now, we have come back down a little bit with this drawdown, but we're currently at about 65%. So the model is currently giving a 65% chance that the price of HBAR will be above where it is today 180 days from now. So basically 6 months from now, it's saying there's a 65% chance that will be positive. And this model has, you know, in the ballparks of, you know, 80+% accuracy, depending on what, you know, time frame you're looking at when you're testing it. It seems like a pretty robust model, and this is something that works not just for HBAR, for other assets as well. Now, obviously not financial advice. You should make your own opinion, read the data as you interpret, and of course, this is just what this model thinks, but it has done a good job in the past of looking at this. And the reason I wanted to show this is I think this gives confluence with what I was just talking about with the MBI. This idea that we've been in this oppressive bear market, and this model was indeed identifying that as being an oppressive bear market. Should also note, if you fit the model only up to data all the way back here, it's still called this accurately. It still got very bearish right up around here, right before we went into this massive bear market. But we're in a different situation now with this model than we were back here. Here it was incredibly bearish, and that ended up playing out. Here it's now getting a lot more bullish. It's now saying, kind of like it was back here, that even though we chopped sideways for a while, we then led into that big parabolic rally. It's telling a potentially getting into a similar place here, which again doesn't mean that we're necessarily immediately going to go off to the upside. Could be some volatility throughout here, but it's leaning in the bullish direction. So as it projects out, in this case 6 months, it's saying that there's a decent probability of upside, and that's outweighing the probability of downside, basically. So I'll have to keep an eye and see how this all plays out. But I like adding this model to the arsenal because it really gives us that ability to kind of look into the future and say, okay, can we assign a probability to upside versus downside and get a sense of should we be bullish or bearish? And this model takes in a bunch of different data, and so it's quite smart. It has a lot of things that it's weighing when it's making these probability estimates. So again, we're going to have to watch this to see how it all plays out. But I did just think it bore mentioning that we're potentially entering into this new regime, and this model thinks that's the case. The MBI is suggesting that that might be the case. When we're looking long term, this is a lot better situation than we were in just last year when the model was bearish and everything was indeed bearish. So again, not financial advice. You make of these data as you will and form your own opinions about where you think HBAR is going. But I did just want to mention that. So to wrap this up then, my takeaway here is that it's obviously unfortunate that this exploit happened. No one wants this to happen. And I think in the short term, there's going to be some bearish narratives and potentially some fallout. And certainly a lot of people using this as a cudgel to kind of bash Hedera, and especially maybe tout other chains in comparison to it. But oftentimes those narratives are just noise. They're kind of more short term. I personally am not all that concerned unless this becomes a pattern, or if we were to start seeing different organizations saying, all right, that's it, we're going to abandon our project that was with Hedera, or we're going to stop development of something. Personally, I think that's unlikely just after one outage, but who knows. Unless things like that start to play out, I think this is probably going to be one of those things that kind of fades into memory, and then a year from now, no one's really even talking about it. That a lot of people aren't even aware, and then certainly whenever the next bull market would come around and new market participants enter, they're not even going to be aware this happened because they weren't following Hedera at the time. So that's kind of my base case. Again, just my opinion. You should form your own opinion of what you think is going to happen, where you think we're going. But I just wanted to make this video, give my thoughts about it. Some of the things you're probably going to hear about Hedera, and you may agree, you may disagree with those things. I'm not casting judgment about what the correct conclusion is, but then also just what we can look at going forward. And I think the data that, if history is any indication, and if we can avoid meltdown in the broader markets, so we don't have a massive stock market crash and crypto crash and everything else like that, this is looking potentially like what we saw in the past with HBAR when we're entering into an accumulation zone before more bullish sentiment. All right, if you like the content, or subscribe to the channel, give the video a like and follow us on Twitter, and check out claritydigital.io to check out our data for yourself.